Welcome, guys. So today I'm going to be breaking down for you the market of the month of December in 2025. And I'm going to go through the detached townhouse condo segments, specifically focusing on Mississauga, Toronto, and Milton. But in addition to this, I also want to show you historically where we stand price wise and volume so you have a better picture of what's been happening in the last 10 years. So if you guys are ready, let's begin. Starting with the sales activity overall, in the GTA, we saw a drop from 4,056 last year to 3,697 this December 2025. Average price point dropped from 1.06 mil to one just shy above 1 million in December. That accounted for respectively 8.9% drop in sales activity, and as well as average price was a drop of 5.1% for the price point. And you can also see here active listings did go up 17.5% from 14,000 to 17,000. So roughly almost a $3,000 increase in listings. Days on market, we also saw roughly property days on market 18%. So 65 days versus 55 days in total days that a listing stays on the market, whether it's relisted or if it's been newly listed in total. Breaking it down by regions in the 416 and the 905, we saw that price points similarly in the detached segment was about 1.5 mil, and we also saw 1.12 mil in the semi-detached 976 in townhouse and condo apartments 663. Whereas in the 905, we saw a price point about 1.2 mil in the detached, 857 for the semis, 832 in townhouses, and 555 in the condo apartments. And overall, if we compare the sales activity and average price points, the areas where we can see the largest declines, because everything is a negative in all the categories, with the exception of the 416 detached sales, which was actually positive 10.4%. And as well as the townhouses in 416, we saw an average. So in almost all categories you can see here, we see a majority of them being a negative. The largest decline for price point wise was witnessed in the 416 semi-detached, which was a 12.2% drop compared to last year. So that just kind of gives you a nice snapshot summary of what's been happening. I want to break it down for you for the cities of Milton, Mississauga, and Toronto for different housing categories. Starting with the detached, we did see that in Milton that the median price point was around $1.16 million, and that accounted for 36 sales out of the 187 in Halton region. And you could see here sales to listing price ratio of 97%. So if you're a purchaser of detached, you can most likely expect to save 3% overall. In Mississauga, we saw a median price point of $1.237 million. That was 128 sales. And we saw a sales list price ratio of 95. So a 5% discount compared to what was listed is what you could expect in December. Now, if you go to Toronto, I'm going to break it down by different regions. Overall, it was 1.165 million median price. Toronto West, we saw 1.025 mil. Toronto Central, 1.86, and Toronto East, 971, $750,000. We saw a drop of 4% for the West. Central, 6% drop, and East stayed roughly around what was listed for. And respectively, we saw 143 sales in the west side, 128 in central, and 142 in the east part of Toronto. Going over to the semi-detached market, I want to show you in Milton, there were 16 sales in total, median price $882,000, and 97% sales list price ratio. Mississauga, we saw $899,000. There was 39 sales and 99% sales list price, so not much of a difference from what was listed. And in Toronto, breaking it down, we saw 95 in the west sale, and in Toronto we saw 882.5 in the west, 1.105 in the central, and 905,000 in the east part of Toronto. And in Milton, there was 27 townhouses sold in December, and with a median price point of 810,000 and roughly a 2% discount from what was listed, as you can see. In Mississauga, it was 880,000 median price point, only 8 sales, so low volume there, with a 4% discount from the listing price. And in Toronto, breaking it down, there was 1.048 mil for the west side, 1.287 central, and 762 in the east part, and roughly being priced and sold at what was listed at, with the exception of the east being priced slightly above asking. And in total, we had 17 sales in the west, 20 sales in central, and 18 sales in east part of Toronto. Now, I just quickly want to go through condos. I know it's not the most hot topic, but just to give you an idea for those looking to get into condos, in Milton, we saw 6 condos sell for $569,000 and stayed on the market for about 62 days. For Mississauga, there was 89 condos, so a lot of condos that were actually sold at the median price of $490,000, even at the average of $511,000. A lot more attractive prices for those young first-time buyers, and you can get a lot of discounts these days, and these ones were even sold 3% lower than what was listed. In Toronto, we've had $521,000 in the west, we had $600,000 in central, and $450,000 in the east. In total, there's 697 sales all over Toronto for condos, and you can see here roughly 4% discount on all of those condos that were listed. So definitely a strong buyer's market for the condo segment. Okay, so let me now zoom out and show you the data points in the last 10 years. So you can see what's actually been happening pre-pandemic to what we're seeing now, to really make a better judgment on where the market is and to see if it makes sense to be going into the market now. Starting with Mississauga and the detached market, we know what happened in 2022, which was we came out of the pandemic, and the Bank of Canada did announce, it started giving signals that they were going to start increasing rates because prices started going up. We had high inflation, so they announced it. And then in April, they started making those actual interest rate increases in April. And subsequently, prices have been dropping as expected. So we peaked at 1.954 million for the detached market, and we're currently at 1.4. And the last time we saw 1.4 price point was roughly around here, November, December is when we saw that price point. So we're coming in back 2020 December levels. What's also interesting to note is that following the correction there, we saw in April, from that peak in the spring months, we saw the peak starting to decline. It took a major decline from 2022 to 2023, but then we noticed that it actually started leveling off. So here we saw 1.637 price point, 1.611, and then $1.6 million. For the semi-detached market, similar story, peaking at 1.3 million in 2022 February. We started seeing a decline to 1.13 in May, and it took a slower drop in price every spring, summer. Last time we saw 908,000 pre-pandemic was around basically here between December and January is when we saw that last price point. And for townhouses, we saw the peak go from 1.29 mil in February in 2022. In May, dropped to 1.182. And then 2024, it actually stayed roughly around the same 1.193. But then it took subsequent drops in August 2024, May 2025 to 1.01, to now we're at 905,557, which the last time we saw that was roughly around here between December to January. And it looks like the bottom price levels are roughly in line. It's not drastically changing. So I could expect it to be staying roughly around the same or maybe start to go upwards from now on. For the condo segment, we peaked at 742 in February, and we took another drop to 679 in September 2023, and we start seeing additional drops going forward. Actually, a big drop from here, 2024 September 638 to 573, 2025, 2 years later, and we see a continuing drop 508. The last time we saw 508 was in November 2020. So you're saying you're basically getting 2020 prices. That's the discount what you can buy right now. I can only expect this to be dropping even further. So that's the PO region. Let me just quickly go over Toronto. So looking at the detached market in Toronto, we saw that the price we're at in December was 1.436, and the last time we saw that pre-pandemic was in roughly September 2020, or even actually, yeah, around May 2020 was the last time we saw that. You also notice that from the peak in 2.1 mil in February 2022, we saw some big drops to 1.9 in 23, in the spring months to 1.8, and a steady decline. It actually started to stay roughly around that price point in those spring months going forward. For the winter months, we're at 1.436. That was kind of the lowest of the lows. In January, 1.5 in 2023. So we're kind of, looks like we're hitting that bottom price point cap, as from what I'm seeing. In semi-detached, we hit 1.132 in December, and the last time we saw that was in April, May 2020. And we peaked at 1.5 in 2022, and we saw a steady decline to 1.4, and a slight drop to 1.3 in 2025. So it stayed roughly around the same. In the winter months, it stayed roughly around the same price point. As you can see here, this was kind of the lowest of the lows, 1.105 in 2022. And then you see that 1.114 here in January, 1.116. So we're kind of roughly hovering around that price range in the winter months, telling me that prices are kind of, looks like they are at the bottom. If not, might see some slight drops maybe, but this being the lowest price in 2022, we'll see if it reaches that point or not. Townhouse market, we ended up being at 1.222. The last time we hit that number was around here at April 2021, peaking at 1.465 in March 2022. We saw it drop to 1.356 in 23. It stayed roughly around the same in the following years in the spring, and we saw a slight uptick in April. And it looks like we're actually trending upwards now compared to from November to December. So it's going to be interesting to see what happens there. The bottom price point stayed roughly around the same, 1.064, 1.58, telling me that we've kind of hit the bottom points and we're kind of made that correction already. We'll see how it goes. And finally, for the condo price points, and this is all condos combined, 656, and the last time we hit that number was in roughly around here, January 2021. But even before that, 56, 2020, we've hit those prices, peaking at 829 in February, and then obviously a steady decline, 787, 775, and the most recent being 732. And the bottom price points looks like it's trending downwards still, as you can see. If you draw a line across, it is going downwards. So we'll most likely you're going to see additional drops in the condo market, no surprise. And we'll keep an eye out and let you know. So you might be asking yourself, why are prices dropping? Well, unemployment rate in Toronto is quite high, and it's higher than normal in Canada. But if you look specifically into Toronto, historically, unemployment rate was at under 8% in the last decade. But in the last few months, we've been seeing above that. So right now we're at 8.7% Toronto. So what this does is, and obviously if unemployment rate's high, there's less potential buyers able to get into the market because they don't have the certainty and the security of a job to afford it. Another reason is because sellers' expectations are not being met in terms of price point, and especially for those who purchased in 2022, 2023, they have a certain price point that they're trying to break even on, or maybe even make a little bit of a profit. And as a result, it's sitting on the market longer and prices are slowly coming down, and this affects transaction volume. And lastly, we have the risk and uncertainty of the relations between the US, but also we have all this geopolitics that's happening around the world that's affecting the consumer's confidence in the Canadian economy, and as a result, Canadian job market. And obviously, if there's no job, there's no house. So what do we expect to see in the spring? Well, sellers who cannot sell their properties will relist again in this coming spring and summer. So this is going to add to the pent-up supply as we had also in the last spring, summer. And as for the rates, most economists expect the Bank of Canada to hold its policy rate near 2.25% for most of the year, with some predicting that there will be small potential hikes later in 2026 due to inflation. And as stated by Jason Mercer from TREB, who is our Chief Information Officer, he stated that reaffirmed trade relationships and large-scale domestic economic development projects will be the key for improving home sales moving forward. The GTA households must be confident in their employment situation before committing to long-term monthly mortgage payments, even in this more affordable market. And completely 100% agree with that. And going forward, my prediction is we're going to see some improvement in the market activity, especially if the job numbers improve and prices continue to decline, and sellers and buyers start to accept the new reality of the price environment that we're in as a new normal. And if not, then we're going to continue to see less activity, more terminations, and a continuation in price declines. So there you have it. That's the market report. Let me know what your thoughts are in the comments below. If you found this video helpful, please give it a thumbs up, subscribe, and share for more video tips like this. Until then, talk to you guys on the next video. Cheers.